So these are some of the key elements that, customer support impacts. And I think what's critical is for the sales team to be able to speak in the language that operations and finance and C-suite is thinking in, and be able to tie back how the solution can impact each of these metrics in a positive way. So we talk about from SupportLogic side, 40% reduction in escalation, 53% reduction in time to resolution, 30% increase in first day resolutions. All of those things tied to customer experience, employee experience, and are key elements and some of the drivers and business impacts in the metrics that we're talking about. So let's think about it. Net dollar retention. Net dollar retention is really a focus on how happy your customers are. Do they stay with you? Do they expand their spend profile? If you've provided an excellent customer support experience, the likelihood that a customer churns is very, very minimal. So positive customer support experiences, protecting revenue, increasing net dollar retention. That's one of the key metrics that both investors and executives look at on a pretty regular basis, especially when deciding whether it's fundraising or making business decisions. That's a key metric that folks look at. Again, margins, same thing. Time spent, protecting revenue, fewer costs going into your cost of goods sold for support. Again, increased margins is another huge driver of both company valuation as well as overall company health. Joe, do you want to talk about the other two, customer LTV and Rule of 40?
Yeah, I'd love to. And just going back to some of the metrics you've already covered, like net dollar retention. I mean, in economic times like these, I would say that there's an emphasis on metrics like NDR. I think the VC community has all kind of realized, hey, the grow at all any cost is no longer the in vogue thing to do. And there's been a big shift in growing your existing customer base. So can't say enough good things about focusing on this one as a key value driver when selling to the CFO. Margins are also like near and dear to a CFO's heart, right? Like their job is to build a software business that has best in class margins. And for something like gross margin, you want to target that 75-80% number. And if you are telling a CFO that your software is going to help them do that, you're directly pulling on the heartstrings of the CFO. And a lot of folks, right? Like if you don't live and breathe these numbers every single day, like we do in finance, they're probably somewhat, foreign concepts to you, but there's a lot of good literature out there to just kind of go learn what these means and how to sell with these things in mind to really build that ROI and that value prop, right? I think on the slide that we had before, the ROI, obviously that's like the mecca, right? You want to prove the ROI. And there's a lot of tools where proving the ROI is like super obvious, right? One that I would love to talk about that I'm a big fan of is a tool called Qualified. So Qualified is a chatbot that sits on your website, and it helps your leads or your prospects speak to an SDR, someone in sales development. It helps them get the relevant content that they need from the questions that they may have. And when buying Qualified, right, like the ROI was really obvious. The cost of the tool is about our average ACV. So it was, hey, can Qualified bring us 1 or 2 customers? Then boom, the thing paid for itself. In other tools like that, ROI isn't like, it doesn't punch you in the face. It's not super obvious, right? So these are the kind of the behind the scenes metrics that I think are arguably, more important in some regards, but a little less obvious than maybe the ones that like smack you in the face if you couldn't miss them if you tried, right? So customer LTV, right? You want to keep your customers for a really long time. And you also have to acquire those customers efficiently. Again, your customer efficiency, your acquisition cost has to work in tandem with your net dollar retention. So these two go really, really well together. If you can make the sales process efficient, if you could reduce that churn, then your NDR goes up over time, and these things work together. And then, of course, rule of 40, everybody is focusing more and more on efficiency. Again, the grow at all costs. those times are kind of behind us. So rule of 40 is a really good one that talks about how your profit margins need to be above this 40% threshold. And again, if you can show how your software is going to help the rule of 40 increase when you're talking to a CFO, you've given them, like the cheat sheet for how they need to do their job well.